The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we wrapped up the trade action on Friday, for the most part, it was quiet with a mixed trade in the grains. And we also saw livestock, cattle under some pressure, hogs a little higher. Let's talk about it. Joining us now, Dwayne Bussey with Bolt Marketing. Hey, Dwayne, it's good to have you back on the show, my friend. How are you?
Hey, I'm doing well. Yeah, all refreshed after a 4-day break when ice fishing with my son. So today was my first day back in the markets and diving into it. But yeah, feel pretty refreshed and ready to rock and roll. Now it's a weekend, so I really timed that really well, didn't I?
To be fair, you haven't missed a whole lot this week in the markets. At least that's my perspective. I mean, grains and oilseeds especially just feel like we're kind of marking time almost until the end of the month. USDA reports, really down 2 to 4 in quarter beans on Friday, wheat a little higher. I mean, it just feels very quiet in this grain trade, Dwayne.
No, that was actually kind of my thought too, looking at these markets, that they're just marking time till March 31st, especially corn and soybeans. Well, and even wheat for the most part there too. The corn market, I think we're seeing a lot of fund selling off of that. I was surprised last week when you saw the commitment of traders report. Some people thought that the funds were buying, and no, they're actually liquidating longs, which I'm happy they are, Jesse. It just gives them more powder for buying opportunity if we are dry this spring/summer.
Well, and thinking about the weather, this is something too I've talked about with quite a few folks, and I know, sure you'll have good perspective on this up in eastern South Dakota, but I mean, it does not feel like we have any weather premium really in these grain markets right now, Dwayne.
No, it doesn't. And I don't know what to say about that. I mean, in Northeast South Dakota, we're kind of the prevent plant area. So on one hand, I feel like, well, a dry March and April just means we could, God forbid, actually plant on time. Maybe we gain 3 million acres nationwide because, last year we were 4.5 million prevent plant acres. That's been as low as a million and a half on dry springs. That's not really bullish the market then if we have more acres to plant. But yet it feels like drought 25 kind of started that talk this week with those dust storms in the southern plains this past weekend. And it's too early to be no, it's not too early to be concerned. I mean, are we robbing yield right now? No, but it's something to talk about anyway.
Well, and this is something that I've been very concerned about as well, is that how dry it is, even just to the north of you in the Red River Valley. Spring wheat time frame coming up. We've been hearing all this talk about the central southern plains and the dust storms and the drought concerns when it comes to HRW wheat. But I think about spring wheat coming up here. Plus, do we see any shift to corn or bean acres? I mean, there's a big old red bullseye over the Red River Valley of the North right now, Dwayne.
Yeah, there sure is. So I went to Canada fishing, so up I-29 and back. For this time of year, I mean, it's zero snow, it's dry, and like you said, very dry in spots. The fields look ready to go. In fact, I've planted in a lot worse conditions than the fields look right now, so it makes you wonder why you're waiting. But the acreage shift is a very interesting conversation up here this year. Last year with the spring wheat market, we had things called falling numbers and discounts, and I had so many producers that still had either 1/4 of wheat they would plant or a half section here or there along with their corn soybean mix. I had so many of those guys so frustrated with the price, the discounts come fall. They said, no wheat, never again. So I keep thinking we're going to have less spring wheat acres, and I don't blame those guys for saying that. But yet, if we can get out and plant the last week of March, usually that means a few more spring wheat acres, because guys are like, well, if I can plant that early, I kind of beat the rush, and then I usually have higher yields. But honestly, I think guys are very frustrated with spring wheat price lately and lack of profitability. So I think the acres are lower. It's just like everyone else you've talked to. The thing is more corn acres. That's the talk up here. And it kind of scares me for that 31st planting intentions report. The only shock I would be is if it's lower than 94 million, where we're kind of talking now USDA. I mean, I'm at 95 and a half. I wouldn't be shocked with 96. Kind of dang fearful if we stay dry how high it could be actually.
So with that in mind, how do we manage our risk here ahead of this? We're essentially a week and a half out from this report day. Grain stocks in there too, not just prospective plantings. But I
Right.
look at, say, D's corn, 450 on the board. I mean, do we start trying to do some forward contracting and sales and play in the futures options game just to manage our risk ahead of these reports, Dwayne?
I I think we should, but I would probably do it with the short-term options, weekly options, things like that, just to get through the 31st. Because here's my crystal ball outlook right now is that we do have a bearish report for corn that day. On the planning intentions, quarterly stocks maybe not so much, but that day the planning intention seems to get the headlines. I think that market could get smoked down pretty hard. But then after that, let's go back to what we originally talked. We have no weather premium built in this market. So I would do a short-term thing, especially if you have a lot of your old crop corn left, maybe some short-term weekly put options, things like that, just to protect yourself, just in case the acreage number is 97 plus. But then after that, Jesse, I'd probably be buying the low or exiting those positions quickly thereafter because of what we said. There's no weather premium built in this market. If our ending stock for old crop ends up being below 1.5 billion, oh boy, we need a weather premium for new crop then.
I had a comment from a viewer on our YouTube channel earlier this week talking about how dry it is to the south of you in Iowa.
Yeah.
And that is another concern for me. And I've talked to a lot of friends and family in north central, northeast Iowa. They've said the same thing. It's some of the driest weather they have seen ever, has been some of the comment for me. And so you couple that with, I've heard some producers chatter about, well, everyone's talking corn acres. Maybe I'll put a few beans in instead. So, I mean, it's that age-old acreage conversation that is really going to ebb and flow here for the next 6 weeks, I'd say.
Oh, 100%. I mean, honestly, up here, when I get the March 31st planning intentions report, a lot of times I feel like acres shift then afterwards this far north because we don't have the fertilizer down. If it's a horrible report for corn, I mean, I can shift my acres on my farm. So we joke about that. So no, it's very key to remember these are planning intentions report. Between that, we'll make a marketing plan, but that June 30th acreage report, that's the one that matters and will move the market moving forward. But so yeah, a lot of guesswork still. And this drought thing is, like I said, I feel like it's too early to talk about it. And I almost like seeing drought in my area. We need to get some of this prevent plant back, but it's concerning. All the big drought years, you can go back and list them. They all started with dry springs, it seems like. So it's a concern.
If corn ends up with a bearish report at the end of the month, does that give a big boost to soybeans? I just can't see it with the way the dynamics are in the soy complex right now, Dwayne.
I wouldn't say a big one, but could it give it a pop to get us back to 1050 and that's where we need to sell? Yeah, I think that's possible. Right now we're struggling just to stay above $10, but if that acreage mix for soybean falls below 84, say we're 83 and a half, 82 and a half, remember USDA won't throw out a full S&D table for new crop, just the acreage, but everyone's going to fill in the blanks, right? If it's 82 and a half or 83, that leaves not only zero weather premium soy market, it looks like we're going to have to ration demand if you use last year's demand. So I think that could pop that market. The reason I think that would be a selling opportunity is I don't think we can use last year's demand. I'm one, tariffs or not, I think China's going to dig their heels in here and buy a lot of Brazil beans because they got a huge crop. And I think our export demand is going to be down 200 million bushels next year, Jesse. It could be a lot more than that if tariffs hold. So that's why I think this will be a sell opportunity if you get that low acreage number for soybeans.
And you brought up tariffs. That was going to be the last thing I was going to ask you on grains. I mean, how concerned do we need to be with this April 2nd date and tariffs and this whole fluid conversation? What do you think, Dwayne?
I think you better have enjoyed this last week because this is about the most quiet we're going to be when it comes to tariff talk, I'm afraid. It was quiet this week, right? I mean, there just wasn't a lot of talk of tariffs, but I see today Trump is kind of mentioning April 2nd is going to be like a D-Day type thing. It's a day of reckoning. And so I think next week, I'm afraid that comes back into our news headlines and we start getting some gyrations based off tariffs on, tariffs off.
We're talking with Dwayne Bussey from Bolt Marketing here today on Market Talk. Let's go over to livestock trade, Dwayne. We got a cattle on feed report. We'll see those numbers here in just a little bit, but cattle futures down a bit. It just felt like some position squaring ahead of that report, which we typically see. But cash trade 3 to 7 higher on Friday. Yep. So I mean, there you go. The disconnect between futures and cash, pretty clear on Friday's trade, Dwayne.
It's I know I'm giggling because I'm looking at these charts and going, yeah, I mean, that's another key reversal on feeders, meaning that we had a higher high and a higher low into the and a lower low into the close. So that looks like that's a top on the chart. Now, let me tell you that we've had 3 of those so far, and they've been head fakes. And every time I've fallen for it, thinking like, guys, that could be the high. If I don't sell it this time, is it probably high? Yeah, very good in feeders. Because, I mean, we're $4 lower now after being moderately higher this morning on feeders. But to your point on the live cattle side, cash cattle trades, higher today to sharply higher, above the board. Makes me think that today is just what you said, just a profit taking. Let's pull back. Let's correct a little bit. I mean, if you were long on Monday, in April futures or June futures were just under 208, wouldn't you want to take profits before the cattle on feed report? So I'm going to say for now, I think that's exactly what it was. It's just profit taking, and we'll get the numbers and digest them. And, trade action next week will be key because we do leave this big candlestick now that we have to go out technically and take those highs out again next week. But the way the fundamentals are, this market looks very strong. I'm probably taking your next question away already, Jesse, but what concerns me is the U.S. economy. I'm worried that's going to be the thing that actually tops this market. It won't be supply and demand. We don't have enough calves. We're having to import meat. I'm just worried with the funds someday will wake up and say, enough is enough. I want out of my cattle positions. And they're so heavily on the long side that when they get out, it's going to be pretty nasty.
Well, you brought it up, so let's go there. U.S. economy, we saw the Fed hold interest rates steady this past week. Stocks have been all over the place. I mean, inflation, everyone's starting to talk about inflation again. I mean, you look at that macro picture. What's your feeling right now, Dwayne?
Boy, that's tough to call those. I'm clicking through some charts here and seeing, but yeah, you're right. They all look kind of nasty, don't they? I mean, I've thought the stock market needed a pullback since 2010, so that'll tell you how wrong I've been. Then's been just white hot, right? But it does feel like it's overdone. It does feel like it needs a pullback. And yeah, when we talk these tariffs, it's a lot of times it's us that are going to pay it first, the consumer. So I would think it should be concerning. And does it force a recession? Well, I'm not smart enough to say that, but I do love the U.S. dollar dipping lower. A lot of people say the U.S. dollar has dipped enough that it will offset a lot of the tariffs we're putting on our grains or other countries are putting on our grains. So hopefully it balances out for the ag producer in the Midwest here. But my biggest concern, again, would be if the U.S. economy does even dip or even think we're going in a recession, well, the meat counter should be the first place. Those high choice cuts of meat should be the first place that gets knocked back. But time will tell. Demand has been great so far. And, grilling season, man, it's nothing more I want to do than go out and grill a ribeye this afternoon as it's nice and warm out.
Absolutely. Absolutely. Well, and it's something I think we can at least celebrate from Friday's trade. Hog futures were higher. Weekly pork exports were a marketing year low this past week, but futures rallied on Friday. So there's one bright spot for us, Dwayne.
Yeah, the hog market. Talk about a crazy market. That thing, I don't know if it trades any news anymore. That seems to be like a good old boys club that just does its own thing. But, to the whole point we just talked about, I mean, if I'm even remotely right, the economy is going to struggle a little bit. And shouldn't the hog market pick up a little bit, the cheaper white meat, right? And maybe there's a little bit to that. There might have also been some profit taken on lean hogs too, as people say they took their short positions off here. And I feel like we're cheap enough. June below 100, I think is still fairly cheap when it comes to hogs. We still have this big question mark out there about the disease pressure we had in the Midwest this winter. There was a lot of talk of that being really bad. And if it is, the numbers should be lighter. And then honestly, June should be above 100 then. So yeah, a little life in the lean hog market today.
Dwayne, final thoughts for folks as we close out the show today. What would you leave folks with?
Yeah, well, a lot of moving parts, especially in the grain market, like we talked about. So go back, look at your marketing plans. I think it's okay to not sell old crop corn at this price level, even though I'm talking bearish in the next couple weeks. And new crop, you should have some hedges on by now. But if we get this hard dip on the acreage thing, which is, remember, just acreage intentions, it's a good time to go and buy courage calls. And if soybeans get a rally on a low dip, it's a hell of a good time just to sell.
Dwayne, if folks want to reach out to you for a conversation there at Bolt Marketing, how can they get in touch?
Yeah, they can call us here directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
Dwayne, go enjoy that ribeye and have a good rest of the day. We'll talk to you again soon, my friend. Appreciate you being with us.
Sounds good. Thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.